Hi everyone, welcome to the Arena with Matt Boyce. The Arena is sponsored by Maximus Mortgage Advisors. When you want to go with a local lender, they will relentlessly fight for you. Just go to maxloans.com to get started. So if this is your first time tuning in, the Arena is RVN's only real estate specific show. The Arena was put together really because this market's a battle. And we want to bring in industry professionals that are going to help you fight that battle and, of course, win. So today I'm excited. Today I have Adam Funck from Maximus Mortgage Advisors. Maximus is, of course, our sponsor, and Adam is our first loan officer, mortgage industry professional that I'm interviewing, and I'm really hoping that he's going to be able to give you an insight as to what's happening, of course, from a lender's perspective on what's happening in the market, and give us some advice. And I know Adam was also actively involved in many things and lives in the city, so we have, again, big perspective here. Welcome, Adam. Thanks for coming on the show.
Thanks for having me. This is exciting.
Yeah. So I've never interviewed a loan officer. Usually we have real estate agents on here, of course, because we want to know what's going on in the market. So I think a lot of people probably just want to know, what is it you do? What does a loan officer actually do?
So really the base root of it is our job is to make sure that the clients are qualified and eligible to buy a house. So we're going to walk through and help the clients make sure they're understanding their finances, their credit, see that they are lining up with the federal guidelines to make sure that they're eligible for the various mortgage products that exist. If they're not meeting some of the eligible guidelines on the federal level, we can always look to see if there's anything in the broker channel, kind of in the private market sector. But it's really about pairing people with a loan that makes the best financial sense for them, which then allows us to guide on what their shopping price point should be for a house. So it helps them, for that financial piece to know where they should be buying and how much they should be spending based on their comfort level.
Well, and I think that's important. You touched on different types of lenders, and I think maybe there's some confusion there because it seems like there's all sorts of different lenders. Can you just briefly go over what is it that you do that's different from other lenders, and what's the advantage of going with someone like you?
So going with someone local, you've got several advantages. Obviously, with being a local lender, I understand the local market a little bit more. I'm going to know some of the nuances of Philadelphia that if the lender is working in a call center in the middle of the country, may not know that Philly has or does X or Y a little bit different than other markets. It also allows us to partner up with good agents in the area so we can refer our clients who need an agent to someone local who knows specialties in the neighborhood. And it's really it's having those larger financial conversations. It's working with someone in a call center. Their job is going to be to, get you into the loan and get you through and get you through the loan process so that they can move on to help someone else. My goal is to really make sure you understand your finances, where you're at, where you're coming from, and how you can leverage buying a house to further your financial means and your long-term goals for yourself.
That's interesting. We work with a lot of financial advisors, and it sounds to me almost like you take an advisory role in the beginning. Especially you touched on, well, what payment do these people want? If you're going into it, you could probably qualify for $1 million, but it doesn't mean that's what we want to spend every month. So is that kind of your approach where you're taking more advisory roles in the beginning? How is that different also than if I just walk into TD Bank or any of the banks or any of the credit unions? What is it really that you're doing that's different than they would do?
So working with a local lender or broker gives you a little bit more options, I guess you could say. So if you walk into TD Bank, you're going to get a TD Bank loan based on whatever programs TD Bank is offering at that exact time. Working with local lenders or brokers who work with multiple banks and financing channels, Bank A may not work for you. It might not line up with what your qualifications are. Their rules may be too specific or tight for your financial situation, but our option B might line up with you. And so it gives us the option to kind of figure out where there's a loan home for you that we can kind of pair you with so that we know you've got the financing options you need to get into a house.
You mentioned something earlier before we went on the show, and it was very interesting because it doesn't seem like a lot of lenders would do this. You mentioned something about an appraisal waiver. And I thought that was interesting because I know that the majority of banks don't offer this. So what is it, and how are you able to offer it and they can't?
Yeah, so it is at the federal level, so technically they should be able to, but some of them just choose not to. The appraisal waiver is really about the total information that's available around a property. Fannie Mae started tracking years ago via databases information around properties and values, and they use that to kind of determine, is the house that's being bought for an appropriate value. They also look at some of the financing pieces. If you're doing a larger down payment, that plays into being able to get the appraisal waiver a little bit easier than if you're doing a small down payment. But it's a matter of there being enough aggregate information around a property to say, yes, what you're buying it for makes sense for the value, so therefore an appraisal is not needed. And it's taking a look at that it's the full financial picture. So again, it's kind of that advisory piece. We want to look at everything because all of the tiny little pieces feed into this calculation, and that determines whether or not an appraisal waiver can or cannot be issued on a property and whether or not we get to skip the appraisal process.
Sounds to me like that would be some good ammunition going into, if I'm a buyer and I'm going into an offer and trying to negotiate with the seller, seems like that would be a really good piece.
Yeah, it's, if the sellers has some nerves around will this or won't this appraise, and we're able to get the appraisal waiver, it no longer matters because it says there's enough aggregate data that says yes, we support this value, so we can skip the process of the formal appraisal and take the value at contract.
So another thing Adam brought up too was, and again, everything we're trying to give you is just ammunition to help you fight this battle that is the market, right? So we're just trying to give you a little leg up over the other buyers that might not have someone like Adam, someone local, giving them all of these options. So another thing that you mentioned was this lock and shop program. I thought this was interesting because everyone is so sensitive to rates right now because they just spiked.
Yeah.
So what is a lock and shop, and how's that going to be advantageous for the buyers?
So lock and shop is where your interest rate is locked at the time of pre-approval, and then you have, and it depends upon which lender we're kind of assigning or working with you with, how long you then have to find a house for that extended rate lock period. So it protects you from any large fluctuations in mortgage rates. There's pros and cons to everything. You want to get into the details with with us or your lender when you're talking through. But it's really a matter of being able to lock in where market rates are now to protect you from any future rate hikes or changes down the road.
Well, I know
if you know you're going to buy within a set amount of time.
And I know how just so stressful the process is to so many people. There's so much to worry about. Sounds to me like that's just one less thing they would have to worry about. Yeah. So that's a great program. So, I loved getting Adam on the show today because Adam has a really unique perspective. Adam lives in the city, in Philadelphia, and he works, of course, within the city, but he also works outside in the suburbs and all over New Jersey. So Adam can kind of see what's going on and all the nuances, again, between Philly and Jersey. So I'm just interested, if I'm a buyer and I'm looking to purchase in the city or the suburbs, what are the major differences you're seeing right now?
So at the end of the day, the advantage to being in the city is there are less inventory issues than there are in the suburbs. If you're trying to be in a specific town, depending upon the size of the town, the number of houses is the number of houses. You're going to have less of that in Philadelphia if you're open to multiple neighborhoods. So that helps make Philly a little bit of more of an insular bubble when the market...
You don't want to say the word bubble.
Well, not that kind of bubble.
Everyone's talking about the bubble. There's no bubble.
Not a bubble.
FYI, there's no bubble. But yeah.
Just Philly being its own little pocket
Microcosm.
to itself. Microcosm.
I like that.
Yeah, there we go.
That's what I'm here for.
So Philly being its own little microcosm kind of protected itself and the buyers for some of the crazy stuff that's happened in the past 2 years. There were certain neighborhoods where you had the crazy bidding wars, but in general there was significantly less of that in the city. Because the city is continually growing, because there is not a shortage of land in the city to build on. There are thousands upon thousands of empty lots that can be developed and new houses can be built. So there's not that shortage. That helps protect from the shortage of inventory, because there's always builders in the city who are building new construction houses in all of the neighborhoods. Yeah, you'll have a hot neighborhood that might be a little bit more competitive, but if you're open to going maybe the next neighborhood over and being just slightly outside of that, it might open up some options for you. It might open up a lower price point for you, so you can get into a larger house for less money. That's one of the advantages to being in the city over the suburbs, is that it's really just, it kind of self-solves the inventory problem that a lot of areas were having.
Well, and it seems with real estate right now, I feel like if you're younger, if you've saved up the money to be a first-time homeowner and you want to buy that first house, I know a big part of that is the investment part, right? So it's not, you're not going to be in this house forever. You're hoping to get into that house, make some money on it, and then kind of leapfrog to that next house and upgrade. So investment-wise, what are you seeing in the city as an advantage?
So Philly's, I mean, you laid out the baseline to it. Philly will always have a rental market. There will always be people who desire living in an urban setting. And one of the advantages to Philadelphia is that Philadelphia City is Philadelphia County. And so if you're like, well, I don't really like being in the row homes where it's the tight city feel, you can go out towards West Mount area and Germantown or up into the Northeast, where you've got yards and single family homes that are at most sharing one wall with the neighbor's house, the twin. And so you can find the energy and the feel of the neighborhood that you like. So it gives you some advantages there. But if you take a step back and look at the bigger picture of the kind of sprawling metropolis that is the Northeast, Philly is priced below Boston, New York, DC. We're about equal with Baltimore. So given how much size and how much amenities Philadelphia has as a city, our lower price point makes it a worthwhile place to invest, because you have a better chance of, because Philly is undervalued in the regards of how cities are generally priced in the US, there is room for Philly to just keep going on the upswing that it has been. It's why there is not a bubble. It's because it's going to keep growing. It's going to keep rising in value for different properties. And it makes it easier because there's so many different neighborhoods. Again, the more open you are to different neighborhoods, the more options you will have. You can buy a single family row home in different neighborhoods for $50,000, $60,000, $75,000. You can't do that most other places.
And this again is why you want to work with someone that's local, that knows the markets, because this isn't just about getting you pre-approved for a mortgage. This is about really guiding you through the whole transaction, the whole process. Guys, we're going to take a quick break. We'll be back. We have some interesting things to go over. Adam wants to tell a couple things, and then we're of course going to go over the market and rate updates. So don't go anywhere. We'll be right back. Thanks so much.
Shelter dogs aren't broken. They've simply experienced more life. If they were human, we would call them wise. They would be the ones with tales to tell and stories to write. The ones dealt a bad hand who responded with courage. Do not pity a shelter dog. Adopt one.
Say we've got grit, and we'll take it as a compliment. Because it's our uncommon drive, our spark within, that brings us together and sets us apart. We are temple made. And when others take shortcuts, when others take breaks, when others take the easy way, we take charge.
Add Essence.
Back to the arena with Matt Boyce. I have, again, Adam Funck with me today. He's with Maximus Mortgage Advisors. Adam has been a loan officer for well over a decade, and he's really given us an amazing insight into the markets, into what exactly loan officers do, and of course, being more of an advisor to you rather than just giving you a pre-approval. Here's your rate, here's the numbers, good luck. Adam is an active investor himself. Adam works with a lot of real estate agents. And again, I think that's a good segue. I just want to touch real quick on a lot of people just don't know where to start. Do they start with the mortgage? Do they start with a realtor? What, in your opinion, would be the advantage of starting with either, and what do you recommend, and how do you help people?
So a lot of it depends upon your timeline. If you're ready to dive into the shopping, talk to a lender. Because if you talk to a realtor first, the first thing they're going to do is refer you to a lender because they don't know what to show you, they don't know what price point you're at, they don't know what neighborhoods make sense for you until they know what you can afford. And the only way to find that out is to talk to a lender and go through the pre-approval process. So if you're ready to dive in, talk to a lender first. If you're a person who's really, really good at your finances and you know where your credit is, you know where you're at, you know financially you're solid, you can absolutely talk to an agent first, start to get an idea on houses and neighborhoods, and then flush out the financial conversation, in a couple days or weeks when you're ready to really dive into making offers. If you're the opposite side of that and you don't know your finances or your credit and you're not sure where you stand, but you're like, well, I'm not buying for a year, what's the point? The point is to help you clear up that fog. We can walk you through where you're at, help you set goals on where you should be for when you are ready to start shopping in a year. So that way, when that time comes, you're not behind the eight ball. You are ready to go, you can hit the market, be competitive with other buyers, and place strong offers so that hopefully the sellers go with you. So starting with the financial conversation is always a good idea, no matter how far out you are from the home buying process.
And Adam was telling me in the middle of the break that he also, because there's so many neighborhoods within Philadelphia, and he works with so many amazing real estate agents that are hyper local, that know these specific neighborhoods so well. If you have no idea what realtor to use, ask Adam. Adam will give you a nice, honest opinion on who to use, correct?
Yeah, absolutely. I work with some of the best agents in Philadelphia. I've been doing this for 10 years in the city. I know solid, amazing people who will take the absolute best care of you.
So speaking of Philly, another reason I wanted to bring Adam on, and Adam, I know you're actively involved in the community with nonprofits. There's just so many people I meet in business. That's all they do. It's business, and then maybe they go to happy hour. So, listen, nothing wrong with that, right? No. But we all need a happy hour every once in a while. Yeah. But talk to me a little bit about what you have going on and kind of how have you melded that together with work?
So, one of the, I've been very fortunate in my career. I've been able to find success that at a younger age I didn't fathom was really possible. And I'm that proponent of when you find that success, build the bigger table. It's that common phrase that people know. And so being involved, I love Philadelphia. I've lived in the city for 10 years. It is my home. My heart is there. I love the city completely. And so for me, a big piece of loving where you are is also kind of helping, again, bigger table, spreading the love around. So I do what I can within my financial means to help and support local area nonprofits. Again, it's an advantage to working with a local person. You help me have my success. It allows me to help support the area that I work with. So I do my best to attend, several nonprofit galas a year where I'll buy a table, bring some friends, some people who may not have heard of this nonprofit. It's a good party, you have a fun time, but you're helping a local nonprofit agency meet their funding goals and support their mission. So you've got, and I'm going to draw blanks on the names, I should have written them down, that's my fault, but there's nonprofits in North City who are taking empty lots from the city and turning them into local urban farms so that people don't have a food desert, so that there are local grown produce that is available to the neighborhood. There's, I've been involved with the Philadelphia Gay Men's Chorus for years. I help with the Delaware Valley Legacy Fund, which is a grant maker for other queer nonprofits in the city or in the region. Babashi is another nonprofit that I absolutely love. They do a lot of work around people living with debilitating diseases like AIDS that help them get things that they need and make sure that they're getting the care that they need as they fight any illnesses. So it's just, again, it's about helping take care of not just yourself but those around you, and that's a big piece of why I do what I do. And again, it's working with someone local helps the local people do that. If you're working with TD Bank, yeah, you might be talking to someone local, but they may not have the same thing. But if you're talking to someone at a local call center in Indiana, you're no longer helping the community that you now are buying in and are a part of. And it lifts all of us up as we help those around us.
Well, and it's also just such a great circle, right? It's you being involved in the community and just loving these communities and doing everything you can to help them. And then you have people coming to you saying, hey, listen, I want to buy a house. What communities do I live in?
Yeah.
What communities do you like? And then this isn't about, well, statistically, this house will go for this and appreciation is this. You could really give a heartfelt opinion on certain parts of the city and how you're helping and how maybe they could help. And of course, if you're looking to help with any of these nonprofits, I'm sure you could put them in touch with the right people. And
or if you just have, I'm passionate about X, do you know of a local nonprofit that does that? And I can absolutely help you with that. My involvement with the nonprofit for years, I have a lot of connections that if I don't happen to know the answer, I know who to ask to get the answer.
That's excellent, Adam.
Yeah.
Well, I wanted to end the show with a new segment, and I just thought it was appropriate because Adam's with me. He's a mortgage professional, and of course I've been in the mortgage business for over 20 years. Got you beat by a few years.
Just a little bit.
So, but I feel like the market, especially real estate mortgage, is like dog years, but in a weird way. Every year is like 10 years.
Especially the last
two. Technically you've been in this business for 100 years, if by that math. So I wanted to end the show with a segment which will be a rate and market update. So we're going to do the Arena rate and market update, give you an idea of what's going on in the markets right now. I have Adam here. So I want to go in and let's start with the basis point increase by the Fed. So it seems like every time we turn the news on, every month, you hear about the government, the Federal Reserve, the Fed they call it, raising rates. And so I just have to ask, what rate are they raising? What's going on here?
So the base rate it doesn't directly feed into mortgages. So don't let that automatically scare you that all of a sudden your mortgage rate's going to go up 0.75, which was the most recent hike. It's tied into more so your car loans, personal loans, credit cards, those kind of financial pieces. But the base rate is what the Federal Reserve sets, and then banks put their buffer on top of it for what they need to stay in business and survive as a company. And so as whatever their margin is that they add, that doesn't change too much. But as the base rate moves, it moves everything up with it. And so that's how it's affecting interest rates. But the mortgage world, as you know, is not tied directly to that. So it's not a 1-for-1 ratio on our end.
And what was really interesting is the Fed raised the rates by 0.75%. 75 basis points is the technical term, but mortgage rates went down.
Yeah.
So everyone's thinking mortgage rates, and I'm laughing because when I'm talking to friends of mine, they're like, oh my God, they raised them again. Are mortgage rates 10%? Where are they right now? They got to be so astronomically high, but they came down. And they came down because of basically inflation. So not to get super technical, but when inflation goes up, mortgage rates follow. And that's because Wall Street, they're the ones that have all the control over mortgage rates, and it has to do with the bond market and how they invest. But basically, if they're going to invest in a bond or a mortgage security that's paying them, let's say 3%, okay, and then inflation is 8%, that means that their money in 20 years, 30 years isn't going to be worth as much. So that erodes the trust in that market. That forces mortgage rates to go higher. So when we see inflation coming back down, we're going to also see mortgage rates coming down. So with the Fed getting so aggressive, raising these rates, what Wall Street's hoping is we're going to have inflation start coming back down in the coming months. That's going to then in turn cause mortgage rates to come back down. And then our buyers are going to stop yelling at us.
De-stress a little bit, hopefully. Hopefully they'll breathe.
But how much lower, Adam, are rates right now compared to the highs? Are you seeing them coming back down? Are you seeing them stabilize? What are you seeing day to day? And how much is this really impacting the average buyer?
So it feels like it's starting to stabilize, which again was one of the goals of the Fed doing what it did. The housing industry, because it affects so many other industries, you need contractors when things break in the house, you need furniture. We touch so many other industries inadvertently that it feels like it is starting to stabilize. If inflation starts to come down with that, things should level off. It came down about, I would say, about 1/4%. So we're hovering.
Well, even from the highs.
Oh, from the high. Oh no, from
we're
the high we're
probably
about
down
0.5% from the peak a month or so ago.
Which is huge
So-
because for a while there, I mean, think about the beginning of the year, rates were obviously still low.
Yeah.
Artificially, some would argue, but
Yeah.
it was like every week they were going higher and higher dramatically. And if you're an advisor like Adam and you're pre-approving someone and setting expectations at a certain price range or payment range, and then all of a sudden they call you back or you call them 3 months from now or a month from now and their payment just went up $200, well, that's a big shock.
Yeah.
So that's great to hear. So you're hearing it from Adam that things, I mean, this is boots on the ground. This is someone that does this every single day. He's on the phone with buyers every day. This isn't, the news. This isn't the media. This isn't someone that's, calling around and giving you an idea of what's happening. This is someone that's giving you a play-by-play, day-by-day type situation and telling you what's going on. So rates are stabilizing and have come down significantly from the highs.
Yeah.
And that's great because then the expectations you're setting
should hold for longer.
Should.
And realistically,
knocking on wood?
if everything else falls in line, again, like you said, rates were being held low kind of arbitrarily. That's not technically where mortgage rates should live. So I think we're kind of settling into what will be the new normal, which is where a healthy rate should live for a mortgage product.
And let's also just end it with this. I bought my first house in 2006. My rate, and I was in the business, was 6.5%.
Yeah.
Okay, and this is at a time when the 0% down, the negative
rules.
amortization loans are coming on. Literally, you're making payments and you're adding to your bill. Your principal every month. You're losing equity. You're underwater on your house, which of course caused so many foreclosures. That's not the case now. Those products do not exist. And right now the advantage, of course, is so much equity.
Yes.
People are sitting on more equity than they ever have. So kind of want to let you finish off the segment. If you're sitting on a ton of equity in the house, but you also have credit card debt or high interest, whatever, or you're just looking to reinvest that money into your house and put an addition on or whatever, what is it that people can do right now?
Yeah, so again, it gets into your overall financial health, and if your mortgage rate is, if you can refinance and do a cash out refinance where your mortgage rate is sitting somewhere in, just say, the fives, but your car loan is at 7% or your credit card's at 21%, you can do a cash out refinance, pull the equity out of your house, completely pay off that debt, which is now saving you money long term. So it's about having deeper, larger financial conversations when you're talking to your mortgage advisor so that you can make strategic financial moves in a way that makes sense for you. If we can eliminate a $400 car payment and a $300
Student
loan or credit card payment, and your mortgage payment only goes up by $150, $200, the smart move then is to take what you are now saving in the debt that you eliminated and investing that somewhere so that it starts to bring in money for you, or paying the principal balance on your mortgage down so that you pay it off faster because you just added more debt to it technically.
Well, you were just telling me about the person you saved over $1,000 a month.
Yeah.
$1,000 a month. Their rate went up. This is so fascinating. Their rate actually went up on the mortgage, so they were very focused on that. But then when Adam broke it down, he was telling me they're saving over $1,000 a month. What would that do for your cash flow, for your life, and just kind of free up your money and stress levels?
Yeah.
That was an amazing story.
It does, and if they're smart, they take that $1,000 and maybe they split it and go $500. I'm just going to put in my savings account for my rainy day fund, and $500 I'm going to talk to my financial advisor and go, what can I do with this to help grow long term for inheritance for my kids' colleges? Those kind of thoughts you can start to have as you free up money. You really need to always be thinking about your financial picture in that holistic sense and not just the individual pieces.
And listen, if you're watching this and you're thinking, well, that's great, Adam can help me with the mortgage part, but the rest of my finances are a mess or my investments are a mess, Adam actually works with a lot of amazing investment people, financial advisors, whatever you want to call them. And these are people that can sit down and do the other side of things and help you with estate planning, insurance, just kind of making sure that you're financially healthy and sound. And that way we all work together as a team.
Yep. And we always work with the best people that are going to take as good care of you as we do, because that's what we want from our clients, because that's how we get referrals and more business. And we all grow together. And
Adam is 100% referral based. So if you would like to speak with Adam, then you can reach him at Funck, A is an apple, Funck, at maxloans.com. He'll get right back to you. Of course, you can just go to maxloans.com and get started there. Adam, thank you so much for coming on the show today.
Yeah. Can I plug my Instagram real quick?
Go for it.
You can also follow me on Instagram at @FunkyMortgage, and it's my last name with a Y, Mortgage, @FunkyMortgage.
And of course, I'll plug me as well. You can follow me at It's Matt Boyce or at Mortgage Maximus, and follow us for more market updates. Of course, next week I'll be having another guest on. It's going to be an amazing show. Stay tuned. Adam, thanks so much for coming on.
Pleasure. This was a blast. Appreciate it.
You got it. Guys, enjoy the rest of their week. And as always, we at the Arena want to give you industry professionals to help you fight this battle and win. Stay tuned for the next episode. Thanks so much.